Hey guys, this is Nick from Financially Aware, and in this video I want to talk about the craziness that happened in the market today, specifically the Nasdaq, and I want to talk about the fact that what happened today in the Nasdaq has only happened one other time in history. And so I'm going to look at that day in history and see what happened after that to get an idea of what could happen in the market going forward based on the action that happened today in the Nasdaq. So let's start on this article here from Zero Hedge, and they talk about that the stock market, the Nasdaq in particular, was up 2% during the day. It gapped up, was up as much as 2%, and then closed down 2% on the day. So that is a pretty rare thing, and it's only happened 26 times in history. And so here, this guy Mike McCurr actually already put a spreadsheet together of all the times that has happened and what happened the next day, the next 5 days, 10 days, 30 days, and 60 days. And you see just recently in March 20th 2020 that happened, and the 60-day return was 42%. But other times that has happened, particularly in the 2000s, the return was more like minus 30% or so. What happened today has only happened one other time before, and what I mean by that is that the Nasdaq 100 rallied more than 2%, set an intraday all-time high, and then reversed to close down by more than 1%. That happened today, and that happened back in March 7th, 2000. And if you want to know where March 7th, 2000 is, it's right around here someplace. So this is March 7th, 2000, this red bar right here, this candlestick. And this is the all-time high in the Nasdaq before the crash, the internet bubble. So this thing was, I don't know, 2 weeks or so before the actual top of the market, where it proceeded to go down 75% afterwards. And so this is kind of a signal, and this signal here, this chart is called a bearish engulfing pattern. And what that means is if you look at this chart, this green candlestick here means that it opened here, it traded as low as here, it traded as high as here, and it closed here. So it closed higher than it opened, right? This red candle means that it opened high up here, higher than the day before, higher than the previous highs of the day before, and traded all the way past the lows of the day before, and still closed lower than the low of the day before. So they call it an engulfing pattern. What that means is it engulfs all the moves of the day before in an opposite way. So if this is a down day and the day before was an up day, that's a bearish engulfing pattern. Okay, so it's supposed to signal a reversal of the trend. So the trend has been going up, and this thing gapped up because everybody was euphoric, and somehow it ended the day lower than the low of the day before. So that's a very bearish signal. So you see just, on what is this? 324, March 24th was the absolute high. And then from there, it was all downhill. All right, so from 324, it was, what's that price? 119.77, as low as 33. So over a 75% drop, and this date is April 3rd, 2001, a year later, down 75%. So is that what's going to happen now? I don't know, but let's go take a look at what happened today and see if that's also a bearish engulfing pattern. So this is the daily chart for the Nasdaq today, the last month or so. And you see that on Friday was an up day. It traded as low as down here. It opened here. It traded as low as down here, but closed very high, close to the top of the day. And today, the market gapped up all the way up here. So it opened up here, traded as high as almost up here, 270 on the QQQ, and yet continued to fall through the whole day, all the way down here, down to like 257, something like that. So this bearish day engulfed the whole positive day of Friday's action. So this is another bearish engulfing pattern here that engulfed the whole positive day. And so if you think of the mentality of people in this type of day, it's usually very negative, because you start off the day looking at the market and you go, wow, the market gapped up, all this percent, and it's going higher, it's making a new all-time high and everything. So everybody is really bullish, and they're thinking the market just goes up every day. Now it's an all-time high. Tesla's up $150, gap up and all this stuff. So everybody's super bullish. Everybody's getting in. And then later on in the day, the market drifts lower and people start to wonder what's going on. And before you know it, at the end of the day, a lot of people that got in today are sitting on pretty big losses, because now they're at the low of the day, or the low past the previous day even. Here's a look at a 15-minute chart of the QQQ. And so you see it closed around 264 on Friday and gapped up close to 266 or something like that, almost 267, and ran up as high as like 269, almost 270, something along those lines. Makes an all-time high. So everybody's really bullish at this huge gap up, continues higher, and then it just starts to fade. And then once it closes below the gap up of the day and goes lower to even break through this support here. The support was the high of Friday, and you see it bounced off it a little bit, but not much. And once it went through that, everybody seemed to just dump everything because that's very bearish, So does this mean that the Nasdaq is going to fall 75% in the next year or something like that? I have no idea, but I could tell you this is not a good sign. And with the frothiness in the market and things like Tesla going nuts, for no apparent reason. You see Tesla gapped up 100 points, went up as high as 1800 and closed down like 1475. So this is kind of a mirror chart of the Nasdaq. But with things going so crazy, things have definitely gotten out of hand in terms of pricing and valuation. However, back in March 2000 when this happened, there was no really news that you can point to that say caused this change in direction during the day. Today, you can't really say that. So you could point to the two pieces of news today that really poured cold water on the market. Was the Dallas Fed Kaplan suggested that the Fed may not be there forever to bail out the market. So that definitely put a scaring on some people who thought that the Fed is just going to forever make the market go up, which after they see the market today, they're probably going to come out tomorrow and say something like, we still are going to support the market or something, because they still want it to go up. And the other thing is maybe some bad headlines with COVID stuff, saying that California is rolling back a lot of the openings in the bars and restaurants and things like that. So that might have put some damper on the market and made people step back and, you know, maybe think things aren't so rosy and kind of take some profits or lighten up on their positions. So does this mean today that this is the beginning of the end for the Nasdaq and the stock market? Curiously, the S&P 500 or the SPY did not have an engulfing pattern day, but it still opened higher and closed lower, so definitely not a positive. But just to give you some perspective, here is a weekly chart of the QQQ, which is the Nasdaq 100, and here's back in 2000 when it peaked. When the Nasdaq peaked around 5,000, something like that, and fell a year later, like I said, lost like 75% of its value. And for people that think the Nasdaq always goes up, take a look at this. So 324 or so was the high 2000. It didn't recover until over here back in, what is that, almost 2017. Okay, so it only now recovered 17 years later or so to its old highs, and now in the last 3 years it has doubled off of the old high back in 2000. It's finally doubled. So had you bought it over here back in 2000 and held on to it, you'd be up 100% 20 years later, which is, you know, less than a 5% compounded yearly or whatever. So it does matter when you buy these stocks and where you buy them, because as you see, if you're buying up here in the euphoria, there's many years of dead money all over here where most likely people do not hold it that long because they give up. And only until there's a new generation of people over here after it goes through new highs do they catch the new euphoria that we have now. And like Mark Twain said, history doesn't repeat, but it rhymes. And right now it seems to be rhyming a lot to the internet bubble back in 99, 2000. So that's my look at the Nasdaq today and what could be happening in the market and the potential going forward for a market fall. Be careful out there. Don't put all your money into any one stock, and don't go all in and think that the market only goes up, because it definitely goes down and could stay down for a very long time. So if you like that video, please give me a thumbs up. Leave me a comment if you think that this bearish engulfing pattern is a tell similar to 1999 or 2000 top, or if you think it's basically nothing or it was basically because of the comments of the Fed today. And as always, if you haven't subscribed, please subscribe so you don't miss any of my future videos. Thanks for watching.